In this video, we will talk about PayPal. Before the video begins, if you like my content, please consider to like, comment and subscribe to my channel for more. PayPal is currently trading around $60, in a continuous struggle to cling back to where it is just a few years ago. Of course, we are now beyond the stock craze of the 2020 era, when prices for securities went very far away from the reasonable. The recent sell-off was triggered by the fundamental results published by PayPal itself, which were lower than the consensus. This may not have triggered the massive sell-off of PayPal stock, but it certainly allowed it to continue, which attracted the attention from the market. We can say with certainty that the company has real value, it has a significant presence for online transactions, and that it does offer a convenient product. However, cryptocurrencies have been replacing a lot of the need to use platforms such as PayPal, since they are even more convenient, flexible and to some extent, anonymous. PayPal recently announced their own stablecoin to facilitate online transfers, but people may hesitate a little before going forward with yet another stablecoin, when there are at least 4 that are established. With that being said, it would be interesting to see when will the stock price slow down the sell-off, and to recover thereafter. There have been 7 million shares traded, compared to 30-day average volume of 13 million shares. In terms of the medium-term volatility, its share price fluctuated between $57.29 and $95.57 on a year-to-year basis. The traded share volume provides us useful information into market activity. It reveals the quantity of shares exchanged at a specific moment, thereby indicating the adequacy of liquidity to facilitate trading strategies. A low volume float can make the stock price susceptible to manipulation and also suggests that the demand can be low. Comparing prevailing volume to the historical average can also show us potential for trend reversal or breakthrough when a substantial difference exists. For instance, a stock breaking through would very often have much higher current volume compared to its historical average. The market cap of PayPal is currently at $64 billion, compared to an enterprise value of $65 billion in its enterprise value. The quick comparison between the market cap and the enterprise value often gives us an idea of whether the stock is trading at a premium or a discount compared to its intrinsic value. It is far from being a perfect measure, but it does offer us an idea of what the current momentum might be. A market cap that is higher than the enterprise value suggests that the stock is trading at a premium, probably because the market believes that the company can deliver in its promises in the future. On the other hand, if the enterprise value is higher than the market cap, then it is a sign that the company may have significant fundamental weaknesses or even solvency issues. When we look at the options market, the ratio between put and call options is 119%. 72,000 contracts have been traded within the most recent day, and over the past 30 days there have been 125,000 contracts traded. The options contracts can help traders to both hedge their risks and provide an additional revenue stream by selling them to others. The put options allows shares to be sold at a strike price, and the call options allow purchases at the strike price. They can be traded until the expiration date, and can tell us what the market sentiment is towards a company, although they might sometimes be wrong. When we look at the ownership structure of the company, 74% of its outstanding shares are owned by the institutional shareholders, some of the biggest institutional owners being Vanguard, Morgan Stanley, and BlackRock. Typically, we would prefer to see institutional involvement if we decided to hold a stock for the long haul. This adds a level of stability and reassurance in the medium to long term. It indicates that the market believes the stock will provide value over an extended period, a crucial aspect for investors to weigh. In my view, a reasonable benchmark for institutional ownership would be in the range of 25% to 30%. However, it's worth noting that there are exceptions to this guideline, as some outstanding companies are predominantly owned by individual retail traders. Additionally, not all stocks are purposed for long-term investing either, making some equities worthwhile to be bought even if they have weak fundamentals and low institutional participation. Lastly, let's take a look at the short interest of PayPal. According to Pypl, the short positions take around 2% of the total floats, and 32% of the short transactions are made in the dark pools. Short interest is important in stock markets. It measures how many shares of a company are borrowed and sold by investors who bet the stock price will fall. When enough people do this collectively, the measure becomes a hot topic. Short squeezes happen when the stock price rises unexpectedly. Those who borrowed shares must buy them back at higher prices, causing more buying, raising the price even more. The theory is that this would force short sellers' hands and bring large profits to the long positions. Short squeezes aren't common. They need high short interest, which isn't always present. Market conditions, company news, or social media can trigger them. Some stocks also have protective mechanisms, like circuit breakers. Timing short squeezes is hard. Investors may lose a lot if they put their money on the wrong stock or at the wrong time. Risk and uncertainty are always there. Short interest shows the number of positions people believe that the stock will tank. Short squeezes do occur but aren't usual. They have been the exceptions to the rule, and not the other way around. Predicting them can be tricky, as retail traders are often too optimistic in calling them. Overall, I think that PayPal is a stock that deserves to have a place in the portfolio, but the timing may not be the best to enter now. It's better to wait for a few weeks to see whether the prices can stabilize around a certain level, and to buy more shares by then.